Good morning, traders. It is Wednesday, January the 22nd. Taking a look at the charts, we got the SP 500 resumed out pretty far, going back to 2017. And what I talked about in a radio show with Howe Street Radio yesterday is the type of price action we're seeing now, where the market chopped around for a while, which is very manageable. This is pretty big rotation actually, and then we've seen this really strong move to the upside, minor correction, another stronger move to the upside in terms of the angle that it's climbing. And here we got another little minor correction, and now we're picking up speed. We're really starting to go a little too parabolic. And we've seen this type of price action before. The market traded sideways, grinds its way higher. These types of bounces are very manageable. The market can do that forever. What it can't do is start to take off and start to go parabolic and straight up. And that's what we're starting to get to now, where the market is climbing on this angle that more or less, when it has done this before, it ended pretty ugly. And as we know, what goes straight up usually comes straight down. What goes straight down usually will come straight back up. These are extreme levels in the market, and I think we're getting primed and ready for what could be potentially a very big, I don't know if you call it a flash crash, but I mean any crash that happens in 3 or 4 days and you see a huge percentage drop, hundreds of points gone, to me is a flash crash, because the average trader investor won't catch it. It happens in a blink of an eye. It's over before you really get a grasp on it. And I feel as though that type of play is coming into action again. And if you look at the type of price action we've seen since 2018, we've seen a couple of these huge drops. These are fairly significant drops. We had three back to back over here, then this one was just insane. And then this one here was another very quick drop. 4-5 trading sessions, 1 week, you get these massive moves to the downside. So we could very easily see something like this again, another big drop. This will be a fairly significant level. This 3,000 area was pretty significant level for the market to break out. I've tagged it a couple times, pulled back significantly, finally broke it and extended higher. That could be a potential downside if we have another big market crash, very similar to this, where it ramps up and then more or less crashes going down. So that's what we need to be aware of. That's why we're slowly scaling out of our positions in the SP 500. We're up over 9% on the recent breakout and run here on the SP 500, and it's starting to get a little long in the teeth. Generally, we don't see trends really move beyond this level too far above the 10% level before we see some type of significant rotation going forward. So that's kind of the core kind of sentiment going forward. Now, what we're seeing now with the put call ratio is, right now, put call ratio is trading very low, and we're right here, meaning the average put call ratio, everyone is extremely bullish and there's no fear in the market. We're actually seeing that same put call ratio reading, which we haven't seen since over here, happen again. So both of these scenarios are playing out in terms of the length of the time that the average put call ratio has been down very low, and of course this ended ugly. So there's some really interesting price action going on. Over here we did see everything crash. We did see actually bonds and equities crash. And overall, as the market became more fearful into here, we started to see actually the bonds and the precious metals market start to rally. So as the stock market topped here and crashed, we actually saw gold miners have a big leg to the upside, and we started to see them perform very well. Every pullback here, we start to see gold miners take off, and that's because gold miners are now more or less in the upswing, and they're on the verge of starting a bull market. They are in an uptrend, so whenever we get weakness in equities, we should start to actually see gold miners perform really well. So a pullback could be very good for the precious metals and the bond markets. Let's take a look over at bonds. They are flat on the session yesterday. They posted pretty nice gains, though. They're flirting to break out above these pivot highs here. Obviously, if we break these highs, we could really start the market to expand and start to go higher. This goes to show there's some fear creeping into the market as the stock market's making all-time highs, which it's making all-time highs again this morning. NASDAQ is up 0.75%, SP 500 up almost 0.5%. So stocks are continuing to push higher, and we're seeing money still move into bonds. It hasn't really popped and broken out yet, but the momentum has shifted from the downtrend to now an uptrend, and it is in this basing formation, and it's on the verge of starting to extend to the upside. Let me just pull up the SP 500 real quick here. You can see we continue to run up here. The 5-day moving average isn't showing, but more or less we have a pop, consolidate for a couple of days. We talked about this yesterday. It pulls back, tests the 5-day, and then starts to go higher. It can do this for a long time, and the market is in a very strong mode. It's going to end ugly, but it is in a very strong trend. You don't want to bet against it just yet. Now let's take a look over at precious metals. Gold down slightly. Yesterday, pretty volatile day in gold. Sold off, rallied, and ended up relatively flat on the session. Today, a little bit down, about a 0.2%. Silver down about the same. Let's take a look at silver real quick. Silver down yesterday, closed fairly weak, and continues to be down a little bit again today. If we look over at gold miners, though, what's interesting is they really perked up and started to perform really well. GDX up 1.7%. GDXJ. GDX actually performed even better, which is a good sign because it's been underperforming. So we're actually seeing some money move into the big cap stocks, which means we could be seeing some big funds starting to move into the gold miners sector. Obviously, if there's big funds moving in, if GDX is outperforming, that means big money is wanting into the precious metals sector, and they can't really just pile into the juniors. There's not enough volume there, so they'll pile into the large caps because the volumes there drive them up. So it's good that we're seeing GDX start to outperform a little bit. To me, that's a sign that I think we might start seeing big capital shift towards this sector. And then we'll see that hopefully break out soon. Again, it's got a similar pattern to bonds. Nice bull flag. It's already started an upward slope here, and we're ready to see if we're going to start to break and run higher. Looking over at natural gas, up 0.5% this morning, continues to what looks to be is a big shakeout type of low. Hopefully we'll get some traction over the next couple sessions here, start to see this reverse and pop to the upside. I feel as though we could get some of these big up days, when you get oversold to these levels, you get these big green up bars. I think we could get into some of these levels here where it's going to start to see accumulation come in, and we're going to build some type of base and see this start to rocket higher. Last but not least, quick look over at crude, down 0.6%, has collapsed in price. It is trading at a critical support level. You can argue here it's forming a little bit of a bear flag. Bearish looking candle yesterday, and it's trading near the lower end of the range. This could very easily kind of break and start to collapse to the downside to 55. There is potential for it to go all the way back down to the 52. And overall, I'm not a huge fan of the chart, just the way there's all this price action through here. More or less, price is now trading in the middle of the range. If you just take the lows to the high, you split it just visually down the center, we're trading right in the middle of the market. So that's one of the reasons why it's stalled out here, but it can act as a bounce, a support level. If it breaks down, it could continue to go down, but there's a lot of different levels along here going down for price, and I'm just not a huge fan of the way that there's been a lot of chatter through here, and it's moved. We've seen a lot of these moves where it drops 5%, rallies 5% back to back many times, and to me it just carries a little bit more risk because it's trading in the middle of its range. It's not an extreme with some type of pattern, so we're just going to leave it be for now. Anyways, that's it for this morning. Other than, let's just take a quick look over at utilities. Look at utility sector. It has really started to take off and rocket to the upside. Utilities are seen as a defensive play as big money starts to move into the asset classes that will perform and continue to do well during a market correction or a recession. No matter what, people still need utilities. Businesses need utilities. And we're working on a new gauge here that actually moves with our trading system, and it'll start to point to where we are. It gives you an idea of where we are. Utilities tend to move first. We see, so we're in the late stages here of the current market cycle. in terms of momentum trades and trades that last around 45 days. So this is kind of a 45-day cycle here. But more or less, we are in this area where utility stocks are outperforming. Utilities tend to do well, and then precious metals start to pick up the slack, and then more or less bonds or inverse ETFs start to come into favor. So that's where we're at in the grand scheme of things. We're seeing money pile into utilities here, and I think metals are on the verge of the next big move, and then the market's going to collapse, and hopefully the utilities will fall out of favor. Metals should continue to stay into favor with bonds and move higher going forward as a very defensive and risk-off type of asset. So anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.